Stocks are under some pressure off the lows, though, but the Dow is still on track for its fifth straight down day, a decline that has eaten up nearly 400 points. All right, Joe, you tell me, what's going on here? We literally were talking about whether the market, whether the rally was having this resurgence, and now we're going for 5 straight down days?
Yeah, well, actually, the market is still having the resurgence, and the rally is still on. The rally is still on where it matters, and that's in the Russell, and that is in the NASDAQ. Over the last 5 days, you talked about the market having 5 consecutive down days. Last 5 days, Russell and the NASDAQ are still higher. That's where the growth is. That's where the opportunity is. That's where the cyclical names are. And we're seeing a clear divide in economic growth here in the U.S. versus the rest of the world. Money's coming out of the emerging markets. It's coming here in the U.S. As long as the Russell and NASDAQ continue to move the way they are, I think we're okay.
No matter, Steve, that financials are below their 200-day moving average. So you've got some technical problems with the financials. Is tech enough to continue to bank on to carry this market higher?
I believe it is. And that's been a question that we've been focused on now for, I guess, a couple of years. And it has bailed us out. Financials had their move, but the moves have been episodic, and then they retrace. So I'm particularly troubled by the financials in my portfolio. I bought some more Citi when it dipped, and guess what? I could buy it now cheaper.
You know that Citi's down 17.5% since the end of January?
I know it all too well.
From its high.
Actually.
And it's not the only one. I mean, you got double-digit declines all across the board.
Goldman, I mean, every financial.
Goldman 16.2, Morgan Stanley 14.5, Bank is down 11, the XLF, as I said, that's down 10. I mean, you're basically in correction territory or thereabouts for the bank.
Right. The next question is loan growth. Once you get past the question, are rates going to rise? And we had that brief rally when they got above, the 10-year got above 3%, and then it retraced. So to me, markets look for reasons to go down when you're at this length of time into a bull market recovery.
You think that's, I felt like we were looking for another reason to go up. That's where we seem to be, right? From the Buffett Apple day to Netflix and Amazon and all these other tech names. The NASDAQ was setting multiple records again last week.
But
it felt like we were back in this uptrend.
We have been going up.
But what happened then?
Well, look, if you look at the more or less, I mean, if you look at the S&P 500 from those late March, early April lows, you've seen a succession of higher lows and higher highs. You look at that chart, just a 3-month chart, and you can see this is just a tiny little rollover that almost certainly, to use your term, Joe, is a consolidation setting up for the next leg higher. The question is, what is the catalyst? Sorry if I'm Captain Obvious. It's earnings coming up in a couple of weeks.
Yeah. All right, Josh, how do you see it?
Well, I want to address the XLF being below the 200-day moving average because I want to just take this opportunity to talk about how valuable that information is. Any technician will tell you that a crossover above or below is not necessarily very significant in a flat market because you're going to see those crossovers happen every day. You can't actually react to that, especially if you're a longer-term investor. You've done fundamental homework on these companies. Just the fact that we've gone above or below shouldn't make you bullish or bearish.
We use it as simply a reminder, if you will, about how these stocks continue to struggle.
So I think that's the right way to use it.
Up, down, all the way around.
I think that's the right way to use it. I totally agree with that. And I think more importantly, what you want to ask yourself is in which direction is it sloping? So the 200-day on the XLF is upwardly sloping. We are still in an uptrend. There will be crossovers above and below, especially these stocks being flat for 6 months. But at the end of the day, that should not be a buy or sell decision. And then I think broader market. Look, Barron's had a feature about which sectors of the market are most susceptible to both negative headlines and actual fundamental issues with tariffs and trade. You've seen the consumer packaged goods companies get absolutely hammered. That's not a new thing that just happened. That's been going on for half a year. And then you look at the industrials. Yeah, they're struggling. The energy stocks, they are struggling. These are legitimate fundamental issues. The thing is, we may be pricing in too much negativity given what the eventual outcome might be. And that's where stock pickers will tell you, hey, this has created a great opportunity in a company that I want to be an investor in. And when we find out what the actual tariffs are or which companies they apply to or whatever, it may not be as bad as what the market's
let me finish my thought before the captain jumped in, which was that markets look for reasons to go down at this point in the market. This is a much longer market than we've seen traditionally. However, there are buying opportunities associated with those. So maybe I don't want to buy financials because I've got enough of them. I'm not selling them. But there are other stocks to buy. I bought Allergan last week. I still think it's a buying opportunity. It's down today. It's lower than where I bought it. So I think that's how you have to do it. But yes.
Would you buy the utilities? And I ask that because Morgan Stanley upgrades those today to
saw that.
overweight.
And
There was this sell-off because of rates moving higher.
Right.
Now, to your point of things that have, and Josh's point, the things that have sold off, whether they present good buying opportunities, Morgan Stanley today suggests
I
yes,
would not, because the principal reason, as you point out, is that he thinks rates have peaked or are near peaking. I don't think rates have peaked, and I think inflation is going to get a lot more aggressive, so that's going to go into utilities. But it depends what your holding period is. I don't think there's huge downside in them, and you have a nice coupon, but don't ever mistake a yield for protecting your downside, as we saw with IBM and other stocks.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.